Hey everyone, Justin here. So Tesla stock closed the day out Friday on a high note, hitting $695 a share for the first time in company history. And as of Monday morning, Tesla will officially be included in the S&P 500 index, which is a pretty big accomplishment for Tesla. Not too long ago, Tesla was a tiny automaker that almost went bankrupt, and now they are slated to enter the S&P 500 as its seventh largest holding. Add to that the massive gains Tesla stock has seen over the last year, and investors are starting to wonder if Tesla might be in for a big correction on Monday morning, which I think is a valid question to ask right now. And there are quite a few different opinions on this subject. So my goal with this video is to bring you up to speed with what all of the experts are saying, and then I will give you my prediction for what I think could happen on Monday morning. But before we get into the video, if you are new here, make sure to hit that subscribe button. We are only a few subscribers away from that 5,000 subscriber mark, and I am very thankful for all of you who have already subscribed. So if you are new here and you also want to support the channel, click that subscribe button. Okay, back to the video. If we look at the price action on Friday, we can see that it was quite a bumpy ride. Tesla stock immediately shot up from its previous close price of $655 a share to over $680 a share within the first 10 minutes of trading on Friday morning. Tesla then quickly fell to $659 a share before rallying again to reach a high of $678 in the middle of the day. But the price action that was the most dramatic came at the end of the day. Tesla dropped to a low of $636 a share at 3:45 p.m. and then went on a huge run up to $695 a share in the last 15 minutes of trading, which was nearly a 10% gain in just 15 minutes. Now, in my previous videos, I did predict that we would see a big spike in Tesla's share price on Friday, but I wrongly assumed that the spike would occur in the after hours market. So it did surprise me to see Tesla stock jump so much when it did. But it does look like that is when the index funds jumped in. And really, I think it's safe to assume that this was the case, since it takes quite a bit of buying power to move a stock like Tesla 10% in just 15 minutes. So with that being said, the big question now becomes, how much Tesla stock did the index funds buy? And this is important because if the index funds that track the S&P 500 didn't get enough Tesla shares on Friday, then there could be more buying that needs to happen, which could drive the stock price of Tesla even higher. Now, before we jump into the numbers, let's back up and explain what exactly happened here. This article from Bloomberg lays out pretty nicely what we saw happen in the final minutes of trading on Friday. The article states that mechanical buying from index tracking funds sent Tesla stock to its record high of $695 per share. And then it goes on to say that this trading happened in the auction used by exchanges to finish trading. And the article does not specify, but I'm going to assume that the auction they are referring to here is what is known as a dark pool, which sounds ominous, but all it really is basically a private exchange. And what that means is that these fund managers who have very large orders to fill don't have to make their trades on the public exchanges where retail investors like you and I can immediately see them. And for those of you who don't know how this works, normally when you buy or sell a stock, your broker will let you view the current buy and sell orders from everyone else in real time. But for certain customers who routinely place very large buy and sell orders, their trades are allowed to occur outside the view of the public. But even though these trades occur in private, that does not mean that the public is completely unaware of them. And that is because all stock transactions that occur throughout the trading day have to be recorded on what is known as the tape. So as a retail investor looking at buy and sell orders, these dark pool transactions won't show up until they actually go through and are recorded on the tape. Now, most brokers don't give you access to this type of information, but there are day trading platforms that will show you a real-time view of the tape. So if you had one of these day trading platforms, then you would be able to see these dark pool money transactions as soon as they occur. So in the article, when they mention the transaction tape, this is what they are referring to. They are referring to the tape that will record all of the private and public transactions that occur on Tesla stock. So if we read the next section of the article, we can see that more than 69 million shares were traded by the index tracking funds according to the closing print. And keep in mind, this closing print is the same thing as the tape we discussed earlier. And these 69 million shares that were traded by index funds is separate from the 200 million shares that were traded in the regular session, which, if we look at this chart, shows just how crazy of a trading day it was on Friday. But again, the biggest thing we are focused on is the amount of shares that were bought by the index funds. So at a price of $695 a share and a volume of 69 million shares, that means index tracking funds bought roughly $50 billion worth of Tesla stock on Friday. And as the article points out, analysts had predicted the index tracking funds would need to buy about $80 billion worth of Tesla stock to bring their funds in line with the index. Based on this, there are a number of different scenarios that could be playing out right now. It is possible that 69 million shares was all that the index tracking funds could get their hands on Friday, which, if that is the case, that would mean that these funds will have to buy another 43 million shares on Monday. But based on this article, it looks like the analysts believe that this is not the case. Steve Sosnick, chief strategist at Interactive Brokers, says that he believes that the low demand is a sign that the index funds have already got all the shares they need. Now, this all gets really confusing, and it's hard to find answers to these questions, but it's my belief, based on the research that I've done, that there will not be any more buying from the index tracking funds moving forward. And the biggest reason I say this is because the number one biggest thing that funds care about is tracking the index. The funds don't care about price or anything like that. They only care about having the lowest tracking error. So any fund that bought Tesla shares before Friday or buys Tesla shares after Friday will not be correctly tracking the index. So the question of where are the remaining 42 million estimated shares, there's no good way of knowing. But the good news is that Tesla did not immediately sell off after the market closed. Sure, Tesla dropped 2.5% in after-hours trading, but I would hardly call that a sell-off. And at $677 a share, Tesla stock is still trading above where it was earlier in the week. But now that the index funds are done buying their shares, the question becomes, how low will Tesla go? And to help us answer that question, we go to the most reliable and accurate source for Tesla stock predictions: the analysts. No, I'm kidding. These analysts are normally wrong, and I think they will continue to be wrong in 2021. Now, I do have to give some analysts credit, as some of them are starting to wake up to Tesla stock and get on board, but still there are many analysts that are forecasting doom and gloom for Tesla stock well into 2021. You had a JP Morgan analyst give Tesla stock a $90 price target last week, and you have articles like this one from Yahoo Finance that predict Tesla will plummet after it enters the S&P 500. Now, if I had to give you my best guess for what I think is going to happen to Tesla stock over the next month, this is what I would say. First, it is likely that we will see Tesla stock drop next week and into January of next year, but I do not believe the stock will plummet like some analysts are predicting. Also, I think there are enough positive catalysts coming next year that Tesla stock will be able to finish the year higher than $700 a share. So to the people that are thinking of selling their Tesla shares on Monday and buying them back at a lower price, I don't know if that is the best strategy. Because, like I said, I don't think we are going to see a huge sell-off in Tesla stock next week. Now, I could be wrong, but I don't think it is going to happen. The lowest I think Tesla will go is $600 a share by mid-January, or maybe even $575 a share. So if your plan is to sell and hope for a big pullback, then I think you have to be really disciplined and be ready to pull the trigger sooner rather than later. Otherwise, you run the risk of missing out on Tesla stock when it goes on its next run. And if Tesla can get some positive price momentum in the first part of next year, then we could see Tesla stock go on another big run up to $1,000 a share. And in my opinion, the reason for this is because a majority of the actively managed funds that use the S&P 500 as their benchmark have no exposure whatsoever to Tesla stock. So if Tesla starts running up, then these fund managers will be forced to buy Tesla stock to try to keep up with the returns of the passively managed funds. So to me, as a long-term investor, the most important thing I'm looking for are potential catalysts that could happen early to mid next year. I discussed in my last video in detail whether Tesla will be able to hit their 2020 delivery goal. And if Tesla can surprise Wall Street and hit that delivery goal, then Tesla stock will most likely stabilize for the short term. And it might not make Tesla stock go up, but it will prevent them from falling further. Now, in my last video, we looked at the numbers and I did say it was possible for Tesla to hit that 500,000 delivery goal. Now, it's not a done deal, but it looks like it is possible. So like I said, I do think that is something that is going to stabilize Tesla stock from falling further in January of next year. Other than that, you have the continued rollout of Tesla's full self-driving software and increased manufacturing capabilities at their Fremont and Shanghai factories. Combined, I think these two catalysts are enough to push Tesla to $1,000 a share sometime next year. But to me, the biggest catalyst for Tesla stock will come near the end of the year as they complete their Austin factory and begin manufacturing the Cybertruck. To me, this is where Tesla will really start to put pressure on legacy automakers, and we could see established brands like GM and Ford really take a hit. The big automakers have been relying heavily on truck sales for many years now, and it's a pretty lucrative market segment. But if you have watched any of Sandy Munro's videos, you would know that the Cybertruck will be easier and cheaper to manufacture, and not to mention more durable than any other truck on the market. So for me, I am not planning on selling any of my Tesla shares, and I will most likely just keep dollar cost averaging in over the next year. And while it might be a fairly uneventful year for Tesla, I think long term, Tesla is right where they need to be to bring massive disruptions to the automotive industry. So if you guys enjoyed the video, make sure to subscribe and hit that like button. And with that, thanks so much for watching, and I'll see you in the next one.